everyone, welcome to BISP Solutions. In today's session, we'll be looking at accounts payable. Okay, so like vendor master migration, we are starting from vendor master migration, then creation of payment terms, and then we'll be looking at P2P cycle. So let's start with vendor master migration. So here is the list of vendor master which we got from our client. So here you can see that it consists of vendor name, then opening balances, company name, then balances as of, then phone number, email address, okay, then address, then payment terms, credit limit, tax ID of the vendor, etc. Now we need to migrate this in the QuickBooks application. Advanced import. Now browse your file. Now after browsing the file, next is choose a sheet. Now the next step is mapping. Add new. Now give the name of mapping, vendor master, import type vendor. Now the next step is that we need to map the data. So all these fields are QuickBooks fields and all these fields are Excel fields which we need to map with the QuickBooks fields. So first is name, vendor name, then opening balances, balance as of, then company name, address, then contact details, mail address, then payment terms, credit limit, tax ID, okay. Now click on save here. First preview this. Okay, we need to close this file. Now let's click on preview here. Do not import rows with errors and 10 rows processed with 0 errors. Okay, now click on OK and then import. Okay, so import is finished and now 9 records have been imported successfully. Let's go and check this window center. Now here are the vendor name list and these are the opening balances of the vendor. Now we need to check this with our Excel sheet. So first vendor is Gadget Man. Okay, now double click on it. Okay, now here you can see Gadget Galore. Okay, sorry. So vendor name. Okay, then opening balance $10025. So 10025. Then contact number. Then mail address, email address, Then under payment settings, here you can see credit limit, that is $45,000, and payment terms, that is 2%, 10 net 30, 2% net 10 net 30. Okay, and then under tax settings, we're having vendor tax ID. Okay, so it is fine. So data has been imported successfully correctly. One more vendor will check. 3521 opening balance, company name, then main phone address, then email address, then address, then payment settings. Under payment settings, 2%, 10 net 30, then credit limit $10,000 US, and then tax ID 4458. Okay, so data has been imported correctly. We have checked this. Now after migrating the vendor master, the next thing I will be showing you that how can we create our own payment terms. So for creating payment terms, let's over to list, then customer and vendor profile, and here terms list. Now these are the default one in the QuickBooks application. Now suppose we want to create our new payment terms. In that case, let's click on new here. Now here you have to provide the terms name. So here I'm creating like 3%, 10 net 30. Okay, it means that just a second, then net due in 30 days, then discount percentage 3%, and here discount if paid within 10 days. Okay, so net due due date is 30 days, but discount is allowable if we paid within 10 days, so we are getting 3% discount from our vendor. Alright, now let's click on OK. So here is our new payment term. Okay, now the next thing is P2P cycle. So what is P2P cycle? So P2P cycle, it starts from creating a purchase order and it ends on when we make payment to the vendor. Okay, let's create one purchase order. Here is the purchase order. So here we create the purchase order, and after creating purchase order, we receive the goods from the vendor, and after that vendor issue the bill to us, and on the basis of that and on the basis of payment terms, we make a payment to the vendor. Alright, so in this P2P cycle, first step is to create the purchase order. So right now I'll be showing you how can we create the purchase order. For creating that, first you have to select the vendor. So here I have selected vendor. Now select the date. So here I am selecting today's date, then PO number, vendor address. Now from here select the item. So right now I am selecting iPhone 14 here, and you can also give the description if you want to give. Then quantity, that how many quantity you are purchasing. Let's suppose 5 quantity at the rate of 855. So overall amount will become 4275. Okay, now let's click on save and new here. Okay, now let's go to the home page again. Now let's click on receive inventory. After creating purchase order, the next step is to receive the inventory. So at the time of when I'm clicking on receive inventory, so here I'm getting two options, that is receive inventory with bill or without bill. So first I'm selecting receive inventory with bill. Okay, so first to select the vendor name. So here you can see when I'm selecting vendor name, so here it is, one pop-up is appearing, that is open purchase order exists for this vendor. Do you want to receive the against one or more of this order? So yes. Now check this and click on OK. So here whatever the information was there in the PO, it is auto populated here. Okay, so here it is bill, but if I don't want to receive the bill, so simply uncheck this box, so it is the item receipt. But right now I'm selecting item receipt as well as bill received, so I'm checking this box. Okay, then now check the information, that is iPhone 14, quantity 5 at the rate of 855, so overall amount 4275. Okay, now after checking all the information, let's click on save and new. Okay, now click on chatterbox text again. Now in the right side you can see that whatever I have created, so it is appearing here. So today I have created this bill. Okay, this is the opening balance as of 31st of 12th. Now here you can see, just open this bill. So here you can see the journal entry for the same. Okay, so here you can see inventory, as we have received inventory from our vendor, so in that case inventory account debited and accounts payable account credited. Okay, so this is the journal effect of this transaction. Let's go back again. Okay, now after purchasing the goods, it is possible that you receive damaged product, or you don't like the product, or maybe any other reason. So in that case you will return the goods to the vendor. Okay, now I'll be showing you how can we return the goods. Okay, for that let's select the vendor again. So here I am selecting this starter box only. Now here I have to select this credit. Okay, and here I have to select the item. So here is the today's date. Then select the item which you want to return to your vendor. Before this, just a second, I want to show you the impact of our transaction on report. So I'll be just opening one of the report, that is trial balance. Inventory asset. So here you can see this is today's date, chatterbox text, and we have purchased iPhone 14, and here you can see it is debited 4275 overall amount. Alright, then go back. Then accounts payable, it is credited by rupees 4275. Type is bill, then there is today's date 11th of January, then chatterbox text vendor name, and here is the account inventory asset. Okay, and here it is credited by rupees 4275. So this is the impact on our trial balance. In the same way you can view the impact on balance sheet, general ledger. Okay, now let's go back again to the credit here. Okay, now we are returning the goods to the vendor. So vendor name I have selected already. Now select the item which you want to return to your vendor. So again iPhone 14 which I have purchased. So I have purchased 5 quantity. I can return partial goods also. So here I am selecting quantity 2 to return. Okay, at the rate of 855, amount 1710. Okay, now after this let's save this, save and new. Okay, again let's go to the report section. Just a minute. So credit, let's open this to view the journal entry, journal impact of this transaction. So here you can see when we purchase the goods from the vendor, so our inventory has been increased, but now we are returning quantity to our vendor. So in that case, this is showing credit balance of rupees 1710 in the inventory asset and accounts payable debited. Earlier it was credited. Okay, now let's go to the report section. Trial balance. Now inventory asset. Now here you can see earlier it was debited by rupees 4275, and when I have returned the goods to the vendor. So here you can see it is credited by rupees 1710. Okay, so this is for inventory. The next is accounts payable. Okay, so earlier accounts payable was credited by rupees 4275. Now when I have credited this return goods to the vendor, in that case it is debited by rupees 1710. Okay, so this is the impact of our transaction on GL report. Also we can do one more thing, that is inventory valuation details. Now here you can see bill. We have purchased 5 quantity of goods from our vendor at the cost of 4275, but we have returned goods to the vendor quantity 2. So here you can see minus 2 and cost is 1710. Okay, so our inventory has also reduced from 5 to 3 available inventory. Okay, now after this let's make a payment to the vendor. For making payment, I have opened this enter bills, or else you can click on pay bills also. So from here I have selected the chat box my vendor, and here okay, now here I'm getting the option of pay bill, so I'm clicking on pay bill here. Okay, 4275, it is the invoice value. Now after that let's click on set discount here. Credit available is 1710. Method, now here you have to select the method. So here I have selected check method and then set discount. So here you can see we need to apply the credit to it, because here it is showing amount to pay is 4275 less discount and 4232, but I have to apply the credit also, which I have created for 1 rupees once for US dollar 1710. Let's check this box to apply this. Okay, now you can see that amount to pay has been changed now from 4275 to 2522 after applying discount. Also I am getting discount of rupees 1% because I am paying uh, amount today only, that is within 10 days, so I am getting discount of 1%. So here you can see discount is applied 42.75. Okay, so now I need to pay amount of rupees 2522.25. Now done. Okay, we need to assign the discount account here, so select the discount account. Done. Okay, I have selected the method also, then date. Now click on pay selected bills. So here is the summary. Done. Now let's go to the report section again. Also you can view the GL impact of the transaction. Okay, one more thing I have to show you, that here you can see sorry, see starter box. Now we have paid the bill. Okay, so now you can see the green check mark and paid is there on the bill. Now see the journal impact. As we have paid 2522, so bank account is credited here and accounts payable debited by rupees 2522 plus 4275, and discount we are receiving because we are paying within 10 days, so we are getting discount and it is our indirect income, so it is also crediting. Okay, 42.75. So this is the transaction journal impact. Now let's go to the report. Trial balance, banks. So here you can see we have paid. Okay, we have paid today only, so here it is today's date and vendor name is starter box and credited. This bank account is credited by rupees 2522.25. Okay, also if you want to view the impact on your balance sheet, so we can view that also. Okay, so here bank account is available. See, it is credited by rupees 2522. Then accounts payable. So here you can see at the time of bill creation it is accounts payable account credited by rupees 4275, and when we return this goods it is debited by rupees 1710, and for remaining amount we have paid the bill to the vendor. We have made the payment. So here you can see it is debited by rupees 2522 plus 4275. In the next impact will be on inventory asset. So here you can see when we receive inventory at that time it is debited by rupees 4275, and when we return goods to the vendor, in that case it is credited by rupees 1710 with the respective amount. Okay, so this is how P2P cycle works. Okay, we have seen all these 4 stages, that is creation of purchase order, then goods receipt, then vendor bill, and then vendor payment. Okay, so this is all about P2P cycle and all. That's all for today. Thank you.